Good morning, everyone. Let's start the Euro Trade show. If you're joining me here for the first time, my name is Macroeconomic. I've been trading for 18 years. I am Series 3 qualified, and I've been a prop trader for about 13 years now. Okay, I have a little micro copper here going on. So I am looking at the continuation of the downside moves that we've seen. Now, if I go back to the daily chart, you will see what I mean. So we had this big accumulation with a move down, a pullback, and now we're seeing some more initiation to the downside. So 4-hour chart, let's see what Asia did. Asia was a little bit directionless today. So nothing much to glean from there. Looking at the 30-minute chart, I do have some of my levels plotted out here. First of which is the London value area from yesterday. Now, yesterday was a bank holiday in the UK, so technically we didn't really have much of a session, but it still managed to create a decent value size. And I am using it as an orientation point for the open sentiment. Yes, Bruno, full screen. Thank you for reminding me. We opened below value, tried to go up to VWAP during the initial balance. That was rejected pretty strongly with quite a bit of volume, which you can see in... Hold on, I'm covering that up. Let's move this. Fib tool to show me my entries and my stops, and then to plot the R multiples. Now, I wish that we could have labels for these, because obviously they are plotted as the extensions or the retracements in this case, but I usually rename them, because while this is 0, 1, 2, your 1 is technically the initial risk taken, right? So when you get to effectively 2, that is actually 1 R multiple. So you're making whatever you're risking. It's a 1-to-1. However, I wanted to show me without any kind of calculations and reaching out to any calculators, because I don't like to mess around with calculations too much while I'm in an active trade. And this helps me figure out how the trade is doing from the perspective of the risk reward, how deep it's drawing into the trade or how well it's doing. And it's something that I wish more platforms would have. Maybe I'll create one of the features to basically have labels next to it. And I know that that our coach Robert Cooney, he is someone who is pretty well versed in trading for these platforms. So I don't know, maybe I'll reach out to him, or maybe I'll just see if my software team can create this for me at some point. But yeah, so that's something that I was kind of missing on these charts. And I have a bastardized version here where, we do have the 2, 3, 4, but it's actually 1R, 2R, 3R, 4R. So yeah, the thoughts behind this setup. So I had the first hypo that I didn't try. I was observing more than anything, and then let's create little hypos actually. So my first hypo, because we opened relatively close to the value area, whenever it opens between sort of 0.4% up to 1% distance from the outer edge of value, I would first look for the price to create a mean reversion up to the value area. Now, if that fails, I will then see whether we extended the initial balance or not, and then I will either shoot for a failed auction short as a failure of that idea, but that's usually if we manage to have a VWAP a little bit higher above the initial balance. Today it was actually inside the initial balance, so they never allowed the market to go over it, and therefore it's not going to be a failed auction. So That's why the second hypo would be the extension of initial balance down into a sustained auction move as a continuation of that idea, right? So now we have a very small initial balance today, and that could mean two things. Either another boring day ahead of the FOMC tomorrow, or a massive single direction day. So obviously, as a trader who is now short, I'm hoping for the second option, right? So a bit of hopium there. But, you know, copper is a very directional market, so it's not unheard of to basically go into this big move. And we do have some options related levels. I do have an HVL 46800, which is not plotted here. But basically, if we go below 468 evens, that would mean a change in the volatility and effectively gamma exposure. That could mean a pretty big day. Again, there are a couple of things where I'm looking at the data that I have in front of me thinking, yeah, this is kind of starting to shape up as a decent sustained auction down setup. If this fails, and if we get stuck just pinging back and forth, that brings me to my third hypo, which would be a neutral day. What does that mean? Range bound, right? Why? Because we extend to both sides of the initial balance. When that happens, on about 7 times out of 10, that severely limits the amount of momentum that you can get. The only time I would consider a breakaway trade in that situation is if one side creates a pretty decent single print to one side. Now, single prints can be in the middle of the profile, leaving it sort of like on the way up or down, or it can be an excess where we pop up to a level, then reverse. So it's a two-sided concept, and context matters, right? So which one will trigger which hypo in the way I do things, very data-driven, data-based, it's going to depend on the context of the other levels around there. And the good thing about doing it this way is that you have things like the value area, settlement, you have options levels. They will all be at slightly different points every day, giving you a different outlook, right? So it's kind of like let's say a band, an orchestra or something like that, where each instrument has its own place in it, but at different points of the song, it is taking on a different role, if that matters, if that makes sense. So let's say you have a guitarist who might be doing a rhythm guitar at one point, but then the point of the song comes where he needs to do a solo. So that's kind of how I look at it. I know it's a little bit weird, but I was a musician to a pretty high level. I was a session pop rock musician for basically 20 years, since 1994 all the way up to 2014 when I seriously went into prop. And that's when I stopped doing gigs and stuff and hopping around the world. And in my head, trading and playing music are actually two very similar things, because both are chaotic, right? You can have a lot of chaos in music, but they are governed by a certain set of rules, right? You can't just go up to a piano and just smack a whole bunch of notes together. They have to make sense, otherwise it's chaos. So that's very similar. Also self-discipline, practice, repetition. Those two are also very similar. Now, what can we put for a fourth version here? Now, let's say that we still have, now this final one, the fourth hypothesis that I have, usually is a lower probability setup, but I still want to have it on there just in case I have something unusual happening. Now today, because we extended to the downside and we just going to delineate that because that's the one that I'm doing now. If we have a neutral day, but then it turns around and goes all the way up and accepts value area, so it goes all the way up to this 472.45 and then closes one of the 30 minutes inside it, that would trigger a value acceptance trade that would then go into something that I call an asymmetrical neutral day. That's kind of like a trending day that starts off to the wrong side. This is my concept. You won't find that in Dalton's teachings, because I only could ever find the running trend days, and he would kind of smush both of them together into the same concept. Now, my asymmetrical neutral days typically call for excess to the wrong side, so just one set of single prints, and then a quick reversal and extension. I'm not actually seeing that, so this is pretty low odds at the moment. It's not impossible, but it's just like very, very low odds. I still want to have it there, just for my own peace of mind. And now we have a nicely planned out day for the London session. I do this for any session that I'm trading. So once London is done, whatever's happened with this particular trade, I will then default to the COMEX session, COMEX levels, although the options levels will stay the same, as will the ADRs, ADR low, exhaustion quantitative areas, and ADR high. But for the most part, you will have different points of the relationship between the VWAP, Globex VWAP, and the COMEX value at that point. And that can change the picture quite drastically. All of this makes me stay pretty objective in my decision making. So even if I'm wrong, I don't ever freak out. I'm just like, nah, whatever. BK says, sell in May and go away. You know what? For copper seasonally, I can totally see that being true. And some people run swings based on short copper in May, which is then now effectively a July contract. But, in May, you sell the July contract and you just leave it. And by the same token, we do have some seasonal data that crude oil and RBOB actually have a bit of a kick up in demand in the lead up to the summer months. So seasonally, RBOB and crude oil typically go up. So we'll see whether maybe I can find some RBOB trades. Probably won't be during the London session though, sadly, because London is not really the session to trade RBOB. You can trade like the overlap just around the time when I'm finishing my my stream. But yeah, these are one of the rare times where I'm not necessarily opposed to taking longs from RBOB. Actually, let's have a look at RBOB. Let's have a look, because it kind of seems like it's showing some life around VWAP there. Let's put it on this chart here. I do need to drag out some levels here. So let's have a look at what that looks like from a weekly standpoint. Oh, that's nice. So we held this weekly low from like 4 weeks ago. Daily chart, again, still holding the recent low. Right now, 9 EMA is being touched. This is the middle of the swing, though, at the moment, which is not too big of a deal because it is a massive time frame. So it's like daily chart. We're not going to be doing intraday based on daily charts. Yeah, see what I mean? 4-hour chart. This is the Globex VWAP. It's really trying to break through this last week's high. This is the 1-hour chart. Sloping upwards. 30 minutes. Where is my initial balance? So there it is. See, one thing I immediately don't like here is that we extended the initial balance. Tiny initial balance as well. I mean, again, this is another example of that potential for the failed auction into an asymmetrical neutral day. So let me just have a look at my other platform. What do we have? I mean, we've opened pretty far from London value because of that big day. So mean reversion not on the cards, purely because we're so far away. Okay, tricky. We still have plenty of range left. Let me see, when do we actually extend yesterday? Yeah, so London did extend, it did extend early, but then as per usual, we had the big post NY cut reversal, which was during NYMEX. It wasn't during London. See what I mean with the crude oil and RBOB? They have that NY cut reaction. This is the reason why I don't like trading it during London, because whatever you've done during London, if you want to hold a swing trade intraday, it's not working. It just doesn't work because of this. So it's either going to be a very painful trade. Like, can you withstand a 261 tick reversal? Can you live through that without freaking out? I think that's even testing some of my monk-like nerves. So yeah, let's leave RBOB for later. Let's focus on this copper trade, because I prefer to be involved in something that will give me a more directional move intraday. Now I have the full contract here on the other side. Why is this CS? I don't know. As well as on the dome, because I want to track what the big boys are doing and whether there's any huge imbalances on there. Okay, so far they're not really able to initiate further longs around the initial bounce low. That's a pretty good sign. I also have bookmap on the other side. We do have some orders around 61.30, sorry, 68.30, all the way down to 68, and that is exactly where that HVL is. HVL, if you're not familiar with Mentor Q levels, is a level where the gamma exposure can flip from positive to negative or negative to positive. So let's say you were in a slightly quieter day and then we run through that level, volatility can kick up, and vice versa. So if we were in a big massive day and then we reach HVL, they might slow it down and actually reverse from there and then go into a chop. Rahul says crude is way too oversold. I'm not entirely sure about that. We've just had OPEC Plus talking about increasing supply. And don't forget, I mean, I don't know whether you were trading during COVID, but futures went negative. And that was a different problem. Obviously, we had China that stopped travel, and China accounts for 15% of the crude oil demand globally. And then it went, futures went negative. They suspended futures after a while, because they weren't prepared for the whole carnage that was COVID. So yeah. Sarah says, I'm in oil from yesterday. That's great. Matthias says, no, we do not have COVID now. No, but we have tariffs and we have OPEC Plus increasing physical supply of oil. What happens? Here's a question for you. Pop tests. What happens when the physical supply of the products is plentiful? Go on. Let me know in the chat. Let me know. Nanka has the right idea. And also, tariffs are still not fully in force, right? And we don't really know the effects that that's going to have on the economy. But we all know generally what happens when the consumer goods ultimately get more expensive. That tends to hit the consumer. That tends to lead to recession. Like, you know, we have to look at macros for what it is. So I don't think that crude oil is oversold by any stretch of imagination. You know, just because something falls a lot and you're like, oh, wow, we went way down. This is where traders go so wrong. You're so zoomed in to like your intraday technicals and stuff that at times when you're supposed to be looking at macro, you're like, oh, but it's very low down. Yeah, but it's not oversold, okay? Remember, like I said, we went negative. Futures. We have some really difficult times ahead of us, okay? If the deals like don't start happening, everybody's going to be in trouble. Everyone. Because don't forget, America is one of the biggest countries in the world. And if they start to go into recession, do you not think that's going to have a knock-on effect on the rest of us? Of course it will. Of course it will. No, this one has wrong levels, so I'm going to take those out. Because this was from, I think, yesterday. Delete. Nice clean chart for the tiny time frames. Wouldn't that be a good band name? Tiny time frames. J Sim says I'm still in PLD. Okay, yeah. I mean, let's have a look at platinum, shall we? Daily chart as always, first and foremost. Haven't really traded platinum much. Yeah. And you are long, Jason's, right? From what I remember you telling me yesterday. Yeah, to me this is still very range bound. Is that one trade, J-Sims? Is that just one trade? Is that on your own account or are you jumping in and out? Nanka says, don't be a javelin catcher. I like that. Not a bottom catcher, javelin catcher. Right, from 960 area. Okay. Let me find platinum first. Where are you? Where are you? Okay. It's a nice move up. What this looks like. You can see how long I traded platinum. It's been like over a month, less, I don't know, more. Yeah, to me this still looks a little bit iffy on the daily chart. I want it to break out of this bloody range, then we can hold platinum for a gazillion ticks. That's what I'm looking for. Right now the range is just down to those like 100 points, 150 points. It's like, oh, ick factor there. Let's see what the options are doing. Thoughts on silver. We can have a look at silver. But my first thought is that silver is still a very large contract, unsuitable for most people's prop accounts because everybody's just starting out. Now, if you built up a nice buffer in there, that's brilliant. So maybe you can have a look at silver. What are we in on? PLN, right? We're in July as well. Let's see what the options guys are trying to do. No major GEX levels here. Your 960 J-Sims, that was a GEX 1. That was a very strong level. But yeah, I'm not really... I would actually really like to sell platinum, but I would like to do so between like sort of 990 and 1,000. Not particularly interested here. But if we get up to this former high, I would really not be super opposed to selling that, because we also have an originating base drop supply around about there. That's a technical supply, not the physical one. And that's actually even higher, around 1,007.3 to be like exact. Yeah, so I'm not going to do anything with platinum. I'm going to wait for some better levels there. That's the beauty of trading more things, right? You can pick and choose your battles. You don't have to be tortured by NQ every day. I go where the action is. So, and I want smooth action, not just chop and overlapping candles all over the place. So yeah, pick your battles, people. Okay, let's have a look at silver, right? Starting on the weekly chart. Whoa. I mean, this is a mess. Weekly chart in a range. Maybe daily looks a bit better. Alright, there's some life in there. Some life. I don't like the wiki candles. So this is what I mean. When we're looking for moves to happen smoothly and to be able to carry them over for several hours, these wicks are all kind of like intraday pullbacks that are pretty fierce. And that means silver for me would probably be more of a see money, take money sort of situation. You're trading sin, are you? Are we all going to trade sin? I like to play games with the names. So this sometimes with CL in July goes to CLN, and on my CQG platform that is Clen, which is like a performance enhancing drug. All right, copper slowly making a move. Some volume just came in there. It's a nice volume. Let's hope it doesn't just turn around and smack me across the face. But yeah, silver looks it looks interesting. Probably more interesting for Asia, because I'm not awake during this. Let's just see whether that's something that happens all the time. I mean, I suppose if you trade Asia, gold and silver are pretty nice products to trade. It's just I find them a bit meh during London. I don't know why. I mean, it's in theory it should be traded pretty widely. Although on the London Metal Exchange back in the day, they never really used to have like silver as an option. They traded a whole bunch of weird metals like aluminium. Copper was one of them. Just a whole bunch of weird metals all traded in like 5-minute increments. And then when it's curb trading, like for 10 minutes, everybody trades everything. But it's only for 10 minutes. So, and that doesn't happen until 10 past 1 p.m. London? Just trying to remember the old times. And then they would have a break, and then they would have the same thing in the afternoon. So say 5-minute increments, and then towards the end, they also traded everything. So I don't know whether they're still kind of carrying over that behavior. A lot of the behaviors that we saw in the open outcry pits, they got carried over into electronic trading. That's why we still have settlement even though we don't close the exchanges. It's pretty odd. That's very odd. Very odd. Let me find silver. There it is. Let me see if I've got a template for COMEX right away. Oh, I've got a black one. There we go. Anytime silver. I think I have too many things open. Let me unburden some of my CPU. I need to upgrade my computer. It's getting a little bit old now. I think it's like 5 years. Didn't upgrade the computer since COVID basically, so it's getting to a point where it's choking a little bit. Right, we've hit the ADR on silver already. But yeah, looking at some of the developments here, London, I mean, look at this. I don't think London is the session for silver. It looks like it mainly moves during Asia. It's probably why I don't like it. Because look at this, it's like moving, okay, one day where it's haphazardly going down during London Friday. But yeah, most of the nice trends seem to be located during Asia. So yeah. It's interesting from the point of view that it hit the average daily range pretty early. Now, average daily range can bring further downside into the picture. Bruno says it's not laggy for me. There's 1 second delay between audio and video. Yeah, it's probably because I have a ton of things open here. So maybe I can sort that out by closing out some things that are not important. Maybe hide some of the stuff I'm not using. But yeah, I have like a million things open. Maybe I can shut down some Google tabs. I always have like a million Google tabs open. Alright, that should be a little bit better. Should be better. Right. Did I miss some questions? Let's see. Daniel Van Ziel wants to know what's the best advice you can give regarding overcoming fear or taking a trade or trade setup or in general overcoming fear in trading. So you need to be here tomorrow for Jerome, Dr. Jerome D. We do Neuroscience Wednesdays, but generally overcoming fear in trading is to get as much experiential data as possible. That involves, first and foremost, sitting down to just observe the setups in a systematic framework. So let's say if I want to take a trade, what is going on? Take a trade based on the initial balance short, which is what I'm doing here. Actually, let's just focus on one. We don't need to stare at the low time frames. You know, if you want to take the initial balance short after it extends, the first step towards that would be to not actually take the trade, but to sit and observe how that setup is doing and journal. So not being in a trade all kind of like stressed out and usually oversized as well. So you're just trembling that you're going to lose $3 grand in one trade, which is also wrong. So first of all, observation. And journaling away from actually clicking buttons. I think that observing a trade setup as it's playing out in front of you without being in it, and then journaling from an objective standpoint, what happened, how it happened, what were you feeling, how did it occur? Was there like a reversal pattern? Was there a continuation pattern? Did any levels get broken? Things like that can actually go so much further than you just being in a combine and absolutely terrified of everything, right? So that would be the first step. Unglue yourself from having to be in a trade, and you need to give yourself experiential data. If you don't have levels, well, then that's your first step. That's going back to like being a beginner, right? Where you have no idea what a level looks like. Everything seems impossible, chaotic, and you just look at price action and go, what is this shit? How can you trade this? But you set some levels, I have market making levels on my chart for a reason. We have a lot of volume coming from options activity. So I think if you're not looking at that these days, post-COVID times, you are at a very, I'm going to mess up this word this early in the morning, disadvantageous position. Is that right? And I will remind everyone that English is not technically my first language, but so yeah. Cut me some slack. So that's the first step. The second step, once you've observed, let's say you've sat down for a month and you've observed some of your setups. I personally have about 5 or 6 core setups and then variants on them. Then you start to go into a practice account and trade with very, very small size. So the smallest size that you can possibly do, 1 micro. Set the stop loss, so wait for the trade setup to happen. Don't go in chasing it, because chasing the setup, like chasing the move up to a level where you want to have a good trade, that is low probability. But once the price is at the level, that's high probability. What I see people doing is, for example, they say, well, I have a level at 469 and then I'm going to chase it up because I want to get anything. It's like, what are you doing? Like, just stop not trading your levels. It's like, what is this like? Am I talking Chinese or what? Like, what's happening? The amount of people that have come to me and are doing that, I just, what is going on there? That is not rational. So I can only assume that those kind of behaviors come from a fight or flight response. They don't really come from any kind of a rational standpoint. Like, why do you need to be in the market? And being in the market all the time is actually not a good thing, okay? You can be in the market all the time if you're a position trader or a swing trader. Knock yourself out. But then you're working off very big levels that have a lot of trading activity inside them. However, for intraday, we have to be very selective. And most people are not. They're like, I'm going to get every tick. And then there's somebody on Topstep yesterday who was actually talking about the very same thing. He called himself a scalper, but then admitted that in the practice account he doesn't scalp, and he just lets the trade go and he makes more money, of course, in a practice account than getting chopped up. And it's like, well, what is that telling you? What is this obsession about everybody wanting to be a scalper? And like, I just really don't get it. Like, after so many years experience, is it because you want to click buttons? But again, that's not business. That's not like, do you want to make money or do you want to click buttons? That would be my question to you. Yeah. So once you're over the practice part of things and you have a little bit of experiential data through the practice account on the smallest position you can possibly have, you will then try to replicate that in the accounts that matter. So start with a combine. Don't go straight into, straight to funded, because you won't have enough experience and emotional resilience, which I would argue is more important to succeed. So all you're going to do is just rack up your bills, paying for the account that you're not ready to trade. It's kind of like signing up to go for the Olympics, but you haven't qualified anywhere yet. It's like, oh, I'm going to the Olympics. Would be, there's steps. First we crawl, then we learn to walk, then we learn to run. You don't start running first as a kid, right? You first just try to get your bearings, learn to balance, totter around. And that's kind of how I feel when people are trying to trade XFAs after passing it in 2 days, passing like the combine, the eval in 2 days. I feel like they're toddlers learning to walk, and they have no balance. So it's all haphazard, and a lot of bumps in the road and falling down and crying, and it's it's a process. It's a journey. Just because it's about clicking a button, it doesn't mean that it's as simple as that. In fact, you need to be very self-aware. You need to be very in tune with your emotions. You need to be very well practiced in the setups that you're taking over and over. Repetition is key. So systematic framework, this is why I teach, systematic framework. And then people come and go, I do 190 trades a day. How can that be systematic? Like, unless you have something that only moves like a tick or two, like 4 to 5 ticks per day, I would then do a lot of trades, because that's all you can do, right? You only have a few ticks here and there. And that's what the people in the pits used to do. They only had 4 to 12 ticks of ES, and there was a big ES contract, the one that's like $250 a handle. $250 a handle. We trade the E-mini. That's why it's called the E-mini, because it's a lot less than that, right? It's $50 a point. So, just certain things like that that's going to set you up for success in any future accounts. But trading from a position of fear and doubt, you'll never get there. But do watch the Neuro Wednesdays tomorrow with Jerome. He always has lots of slides for us, and he talks about it, connecting everything from the neuroscience into trading, because he is a trader, damn good one as well. But we're all still, we're all learning. Like, I can tell you that after 18 years, I know a lot about myself, and I know a lot about how to control myself. And there are majority of the days when I'm like cool as a cucumber, as they would say, right? But there are certain days when other things in my life are happening, and I'm just like not able to gather myself and to have any sort of a rational outlook. But I recognize that at this point. I don't just go and sit and click buttons. I just go, something's up with me today. So you have to have that self-awareness, which is very, very difficult. It's probably one of the most difficult things to do, to be objective with your own emotions without the negative internal dialogue. Now, what we're working here to bring you is the Neuroscience Wednesdays that connect how our brains work and how our brains mess up, and then how to replace those behaviors with better behaviors through visualization practices, through self-awareness, through, maybe even affirmations that are realistic, and trauma, dealing with trauma, right? If you've been traumatized in the markets before, and that's a result of your fear, Daniel, you have to tackle that. I would suggest going to like an EMDR therapist. EMDR stands for Eye Movement Reprocessing. There's a D in it, isn't there? So EMDR, Eye Movement Desensitization and Reprocessing. That's what it stands for. And it's to do with this very interesting thing that they discovered. When our eyes are moving side to side, like literally you're going left, right. If your eyes are moving side to side, it puts your brain into a safe mode. We don't know why, it's just how it is. But they discovered that, and they started to work with trauma victims to replace the negative associations and to minimize the impact that the trauma has on them. Now, for traders, you can absolutely say that you've been traumatized by NQ, that you've been traumatized by volatility, by tariffs, by Trump. It is a trauma, right? Especially if you lost a significant amount of money. That's psychologically damaging. So you have to tackle that before moving forward. Futures Trader says, have you tried ASR ADI using RTH times, not electronic pit times for gold? Yes, for many years. In fact, Futures Trader, ASR actually stands for average session range, which measures only the RTH. Okay, the indicator that I use on the other platform, now I see another question that correlates with this, ADR, ASR. This is just a line on the chart. I don't have my Blatek DR indicator in here. Now, full disclosure, Blatek is my company, right? So we currently only have stuff for MetaTrader 5. Why? Because we created the tools in 2015. We are from the UK, and back then, that was the biggest platform that everybody was using. And I tried to make professional trading tools for the retail trader. So I had, CQG, Bloomberg Terminal also has the profile. We have CTST4 that has the profile and all of that. But I tried to make some of my tools that I was writing in Excel, aside from the profile, and I wanted it all on the chart. So I, at the time, commissioned somebody to create this for me. And this is what it looks like. So I'm just going to remove some of the other things here. And only leave the DR. Okay, so let's remove the Q points too. And you will see a little panel down here. That's the Blatek DR panel. And without me having to go and, perform rain dances to get these numbers, it spews out everything for me, right? So I'm quite lazy these days. So not only does it plot the automatically dynamically tracked lines for the ADR and ASR, it's very customizable too, because you don't have to put in it works straight out of the box. Like if you plonk it down, it will work. But if you're trading something like copper, you will need to adjust certain tools. Now we are creating this for Ninja as well. We might create it for Topstep at some point too, but I need to see what they are going to do with the third-party vendors, because obviously my team, they don't work for free, right? So it's either I have to, that's supply and demand, I'm looking for DR. I have beta versions here, so we're always working on getting them better. Now, session schedules for copper here. I do extend it to electronic trading hours because there are moves that have been happening a lot. But if you just want to put it to RTH, this is obviously in GMT, you would just put it to end at to end at the former pit close. And then you have just a distribution curve for the pit close. And the same thing can be done for my profiles, right? Okay, that's moving nicely. So, there are sophisticated little tools that make my life easier. They're not like, oh, an indicator says long or short. No, they're tools. They are just there to help me figure out things faster so that I don't have to, excuse my language, dick around in Excel spreadsheet for 4 hours to get the same thing. Because you have to export, like if you're going to do Excel, you have to export time series data every day. That's intraday. Then you have to select the time. I did all this, right? Before I had the company, I was doing everything manually. Did it make me into a slightly better trader? Well, maybe, but it was very painful. So I wanted to take the pain away from others, from the rest of my folk. And that's when we went on this crusade to create the indicators that you see here. When it comes to this one, this is literally just a bastardized fib tool. So if I go into it, it says fib retracement, and all I've done is just made this. But the text you see next to it on 1R, 2R, 3R, that's just like literally a text. I created these. They're my creations. Now on my Granny D MetaTrader, this is actually also a fib tool, but just you can name the description. So I like that better because it doesn't show you what the level is, it actually shows you the label. And maybe, like I said, I'm going to ask someone like Robert to maybe put that extra variable in there so that I can have a label. But yeah, so hopefully that helps you. And I mean, Plastic DR, I still have it for sale on MetaTrader website. Not me, my coder, Mr. Cater. Because obviously it's a team. We've got 3 people working on the indicators. And since Ninja went to C# 8, are they on? I think they're still in C# 8. That became a little bit more possible for us to create some optimizations and everything in Ninja. Up until that point, they were stuck on a very old version. It's like, I'm not going to write something in, that's like 1,000,000 years old. Okay, so I answered that question. Let's carry on. So hopefully the stream is a little bit better now. Nathan has a great question. I heard that metals are less volatile and safer. Okay, that statement depends on the metal, I would say. Where would I start to learn about metals and news and how it moves? I trade NQ and ES and have been destroyed too many times. Yeah, join the club. I would say that not all metals are made the same. Now, problem with NQ traders going over to metals is that they're very used to the way NASDAQ kind of sees its intra-candle. I would probably start you off with copper because copper is very smooth, but it requires a lot more patience because you're not going to get 1,000,000 ticks in like 3.5 seconds like NQ. If you're willing to make that adjustment, then yeah, copper might be for you. But if you're looking at something that's more whippy and a lot more like NASDAQ these days, then try GC. But again, if we're talking about you trying to find a smoother product, that would kind of defeat the purpose, in my opinion. So yeah. Ken the Traveler putting out yeah, so that's basically the gist of that. That's the calculation. Obviously you wouldn't be having levels because that's just a piece of code that does the calculation, but yeah. And does it track? Hold on, let me see. I'm as low. Yeah, so it should. Hold on. I don't see, Ken, in your code, I don't see anywhere that that actually takes in the current day low and then tracks the current price based on subtracting and adding ATR high, because that is what our indicator does. This is just a basic one. Is that what all the others are doing? They just go, yeah. So you have to track it. So it's not just like an ADR over the last 10 days and or the open, then we put it. No, it has to track the current day's high and low. And then when one side exceeds that by either by creating a new lower low or lower high or a higher high, that's when the indicator will plot the exhausted dash lines, okay? Future Trader says, it's me, D, been with Market Stalkers. Oh, right, yeah. Used to go by A, right? My first time on Topstep. Good to see you here, man. Yeah, I don't do live streams on my channel anymore. I think, how often do you blow up your accounts? Not often at all, mate. That's you guys, not me. I'm generally able to hold accounts for a pretty long time, usually like anywhere between, well, I've had some that I've never blown up, but prop accounts, probably about a year or so. So, and after a year, I'm like, I've been in this long enough. Let's either drag all of it down, because it's a prop account. Well, I'm not going to hold too much money in it. Or you just decide, it depends what's going on. Like, I have some people who are really diligent to stay in accounts for a long time, but then the accounts are just slowly bleeding money over time. At that point, it's kind of psychologically damaging to go stay in them. And if somebody's in that situation and you're like down to down to like 1,000 or something, just blow it up and start again, okay? Because it's like the whole point of a prop account is to trade diligently, but to also trade a little bit larger than you would in your true accounts, your personal brokerage accounts and stuff. So yeah. Can, yes, but ADR high and ADR low are not just simple, like, let's just find, because you can just look at the ADR, right? You can just look at, where's the ATR over the daily, and you can just derive that, but that's not the measure, right? Some people, actually most folk that we've seen on TradingView, for example, they've created, or they try to copy our indicators, and they take the open of Globex, then they divide the ADR number across 10 days, and then they plot that as like half up, half down. That's the fixed daily range. That has nothing to do with the average range exhaustion, quantitative extreme. It's a different measure, right? We have that on our indicator as well, but that's only for range-bound days. And then it constantly gets overshot, and people are like, oh, this doesn't work. Yeah, because it's not a true exhaustion. Like, it's not a quantitative extreme. Quantitative extreme is if you go into what's happening right now, and then you're tracking the overall ADR, which right now for copper is like 251, and then it's going, are we creating lower lows? Yes. So let's then see at which point, if we assume that it's going to keep creating lower lows, at which point is the ADR low going to get exhausted? And it's not always straight down, right? Sometimes it goes up, and then the ADR is going to migrate up as well. If it keeps going into a single direction day, that's a different piece of information. You actually expect them to get exceeded and then to not react. So, different contextual things tied to it. Co says, do people ever just YOLO it on a big move and add like 15 contracts to a position and make 30, 40? Yeah, we've seen people add 100K as well. 100K. But, yeah, Mario says, well, I don't know why my dome doesn't look like yours. It's because you probably don't have level 2 data. I pay for it, so it's $40, I think, 45, something like that, per month. And you'll find it in your billing. But yes, people do. Should you? I would highly advise against that, because here's something that people don't see behind the scenes. People see YOLOers who make 30, 40K in a day, but then we pull out their trading cards. We sometimes have shoulder tap, and then Mick from the risk team is usually going, yeah, well done, but. And then you see on their card that their average trading day is like negative. It's like minus 200, or it's a very low number. It's like plus 300. Like, it does not paint a picture of somebody who's consistently putting out big days. It's just like a one-off. They caught a tiger by the tail, managed to stay in somehow, and that's their biggest day. So it's like, is that skill? Is that somebody you want to look up to? Or do you want consistency so that you don't get a dopamine rush from one big day, and then to make your entire future trading journey to basically do the same? So just to chase the high of the biggest day. It's a very damaging thing. People have done this many times where they have one big day and then everything becomes about chasing that one big move. Even though the product doesn't do big moves very often, the product is frequently range bound, and they're still like, you know what, we have to work on ourselves, and we have to make sure the dopamine levels come back to baseline. You know, it's very difficult. Philip says, dude asking simple questions and getting a full psych session. Welcome to the Eurotrade. Yeah, that's what we do here. I mean, Ken, out of all of the indicators that we've done, yeah, PineScript probably can get you there. But yeah, I just think that version is a little bit wrong of that code. So just be careful with ChatGPT, man. Because I've looked into it, and it's kind of useful as a beginning, kind of for an idea, but it usually gets code wrong. And then you have to do a lot of it, like, you made the error with this particular part of the code. Can you please correct? And then it corrects it, and then it goes to change the entire code. So you're like, no, keep the remaining code, only change the line such and such where you have... I effing hate ChatGPT at this point. So, you know, it's kind of like trying to do... I actually went down a rabbit hole the other day as a musician, thinking, oh, I'll just make like a funny song for the YouTube channel where I can like mime to it. 93 iterations later, I had something that sort of is possible, but I would never put that out as any kind of a song. So what I'm going to do, more likely, is that I'm going to take the suggestion and then just create the song from scratch. And that's kind of how I think ChatGPT should be done. Like, you get an idea and you're like, oh, okay, but this is wrong. Tommy says, what about a metal for day trading? All metals are pretty decent for day trading, but you have to take a look at CVOL. That's their own VIX, volatility indexes from CME. I have cutoff point for each of them, and platinum is actually on the higher end of that. So, for example, let me see. More tabs. Oh, great. Sorry about the stream. Might get choppy again. De-opening tabs. De-opening tabs. Joke. Metals. Let's see what platinum's doing. Yeah, you see, so platinum's come down from my cutoff point. I like it to be around 29, 30. Ideally, it's sitting at 25. Copper is still high. Copper, anything over 20 is pretty tasty. Now it's 31. Gold, above 20, it gets a bit crazy, but here we are at 22. So most of the metals will be very, very good for day trading, but not necessarily every part of the year, because they can be seasonal. For example, demand for gold heavily increases around Christmas time. Why? Because people buy jewelry, right? They buy gifts, they buy presents. So naturally, both the users and producers, they will be pumping gold or buying gold for their purposes. So yeah, it's the futures, it's the commodities. They actually exist in the world, right? And personally, I don't know, you probably haven't watched me here. I don't get involved in any product that has less than about 150 ticks per day, right? That's my cutoff point to not get involved as well. So ranges are very much connected to the volatility of the product. So when the volatility dies out, that will eventually over time be reflected in the range. It dries up, right? We've seen that in crude oil. It never really came back. Here we are, 18 months later, and crude oil is just like, eh. And that's fine. I mean, it is what it is. But yeah, with metals, the trick is to watch the volatility indexes, to know the cutoff points. And how do you get to the cutoff points? Well, I can tell you mine, but I came by that information by trying some trades, seeing what the volatility index did. How did I feel the trade was doing? Was it easy? Was it like pulling teeth, pulling blood out of a stone? If that's the case, I will put down platinum at 25, very difficult. And then if I see platinum at 25, I don't trade it. Like, it's very simple. And then I wait until the conditions improve, until the VIX, its own VIX, C-vol index gets up to a certain level. Then I look at what the candles look like. And then I go, okay, that's cool. That's pretty good. Let's trade it. Put it back into tradable instruments, right? Obviously, it takes time. But to give you a little bit of a shortcut, for me, platinum is a bit of a dead fish until we get to 29.30 of C-vol. Copper is fine above 20. Very tradable. It still brings very nice extended moves. But they are slower. If you're used to like trading NQ, you will be sitting there going, well, what's happening? Like I have like average hold time for me is about 82 minutes. For a winning trade. For a losing trade, it's probably less than that. It's about 55 or so. But yeah. But yeah, I'm just a day trader. I'm a day trader who holds trades longer. But I'm not, I'm like, I haven't really done any swing trading for a very long time. Without the help of our algorithm. We still do swings every so often, but they're like, a few times a year we're like, oh, okay, it's time to, sell crude oil, for example. Or, we look at seasonality. There's a whole bunch of stuff that goes into that. But we look at seasonality. We look at the positioning of the market makers as well. We look at where the systematic CTAs are also located. Are we going against them if we are going to do a swing? And how does it look technically? Are we reaching a supply on the daily chart? It's usually taken from the daily chart. And then we run them with very big stop losses. I'm not running swings on a 10-tick stop. And even my trades where, I'm running it for a swing intraday, for a multi-hour, sort of an hour and a half, 2 hours, 3 hours, I still use, wider stops, but they are stops within about a quarter of the daily session range, right? I won't go over that because that introduces problems with the risk model, and you then don't have enough space inside the range, the quantitative range of the day, to run that trade. That's a risk model problem for intraday that not many people think about. Because mainly you got all of you, nearly like 90% of people that I've seen trade in prop, they're actually on the other side. They use stops that are way too tight to allow the market to do anything for longer than 5 minutes. And I've been in this trade pretty comfortably since I started the stream. Actually, slightly before, because I was doing it when I was getting ready and waking up. But still, it's like, why wouldn't you size down, increase the stops slightly, and then let it run? Like, give it room to breathe, man. It's like choking it out with a 15-tick stop because you want to trade with 1,000,000 ticks. I would rather use... So let me ask you another question. Who do you think a risk manager is going to be more inclined to support with whatever ideas we have? Somebody who uses 5 tick stops or 10 tick stops and trades with 10 lots, and obviously can make a lot of cash every so often, and does 100 trades per day doing that, racking up the enormous amount of commissions, or somebody who does smaller size but makes an equal, maybe bigger average overall, bigger average per day overall, and yet doesn't have much commission because they only do 5 to 10 trades a day. Who do you think a risk manager is going to be more inclined to love? Who's going to be the teacher's pet? Think about that for a second. Bruno just informed me the level 2 is $39 per month. Thank you. How do I stop revenge trading after taking a loss? 8K off. You need to watch the previous Neuroscience Wednesdays. So we have somebody called Dr. Jerome D, who is one of the top Topstep traders. So he's French, he's lovely, he's super knowledgeable. He is a doctor as well. So he's going to be here with us again tomorrow, I'm hoping. But we do that every Wednesday. So go through the previous Wednesdays and watch the parts, because we talked about this already, right? We have slides. In fact, if you're in Topstep Discord, and that brings me nicely to the segue. There we go. In Discord, there is a section called Trading-Psychology. You will find slides of the previous 2 or 3 sessions that we've done together. But do watch the videos as well. Do watch the previous Wednesdays and join us tomorrow as well. You know, we can tackle that again. It's always going to be like FAQ, you know, how to stop revenge trading, how do I stop fear, how do I stop over trading, how do I stop, like those are all normal issues that people generally deal with, and they do come from self-limiting beliefs. Usually these kind of thoughts are formed, and opinions of the world around you are formed when you are like 2 years old, 3 years old, like when you're a toddler and you're still developing. And for the most part, those ideas are wrong. They are wrong. So we don't have a clear perception of the world around us. It's a problem, you know. But at the same time, this is why we do the Neuro Wednesdays, because we're going to have a real doctor telling you how to replace those behaviors. And usually it involves self-awareness, visualization exercises as well. Some people like to visualize themselves making money. I say visualize yourself how you're going to behave in a loss or after a loss. Set that intention of what comes next rather than getting smacked on the face by NQ and then just going, I need to get it back. And then you go into fight or flight response and then you can say goodbye to your account, right? Or you get so afraid and you go, oh my God, there's my setup, but I just lost the previous. Like you're always working from the previous experience. That needs to change. You cannot carry over the experience of a loss of a previous day, previous trade, previous anything. You need to be, like I say, like Drew Barrymore in 50 First Dates. You need to have a traumatic brain injury that does not allow you to retain any information past the last trade you've done, right? So you do a trade, it's a loss. You forget about it. And you look at every new trade as if it's new. I know it's so difficult. I get it. It's like extraordinarily tough to do that at first. But guess what? There's a thing called neuroplasticity. And the more you practice some of the visualizations that have, like the way I understood it with Jerome, when you put yourself in a position of dissonance through a visualization exercise, that increases your neuroplasticity. And then there's a window for one of those exercises where you can actually mold a new belief, but it's a very small window, right? So we actually talked about it in the last session. So go to the last Wednesday session and watch everything. It's going to be probably the most important video that you will watch in your trading career. I'm not kidding, right? I know that I joke a lot and I use a lot of humor to illustrate some things, but when it comes to psychology, there's nothing funny about it. It's a very serious issue. And you can, luckily we have prop firms now, so you don't have to put your own money into a personal brokerage until you're ready, and until you kind of practiced and prove to yourself and, that you can maintain an account, that you can take payouts, and you can basically get proof of concept, proof of competence, right? But until you get there, you have prop firm accounts. Back in the day, unfortunately, we didn't have that. And you had to use your own money. So people would be blowing up 2 grand, 10 grand. Then they would go and make that money again, that 2 grand blown, 5 grand blown, 10 grand blown. Okay, so now I'm 20K in the hole. I mean, Jesus Christ, what am I doing? As many people have kids. They have, wives. They have, lives. They have mortgages. You can't just be blowing up 10K willy-nilly unless you're reasonably wealthy. And that's not the case for most people, right? Most people go into trading because they look at it as a way to improve their life, and they find hell on earth, right? So it's a serious issue, not being self-aware, not having the emotional resilience right away, but you can work on it. Neuroplasticity is a real thing. Your brains are very well suited for adaptation. That's what, as humans, we have that. Even animals have that, right? Not to the same degree. Yeah, are you walking? I have my King Charles Cavalier just walking. So yeah. And in fact, I always say, having a plan is great, but the plan is a beginning. Like, I have my plan up here. So here it is. That's the plan. They used to be a lot more elaborate. I used to go into the office with half a Bible. Weekly chart, daily chart, because I was worried that I won't be able to remember it all. And then at some point I realized that actually my photographic memory is quite useful in this case. So then I cut them down to one-liners. I can show you. Actually, I'm not going to do that now. I can't be bothered. Sorry. But yeah, basically I have one-liners for daily, weekly, 4 hours. And then the indicator can show me the rest of it. And a lot of the stuff that I'm doing these days is pretty automated. It's a very very efficient activity now, because I've done it so many times over the last 18 years that I just do the same thing every day. And I don't necessarily even need to do a plan, but I still like to have it visually and to also illustrate, how my hypos work and, why they work. Because they're not random hypos, they're based on the probabilities of what can happen in this particular environment based on the initial balance extensions, where we opened, where VWAP is, and, all that other good stuff. All right, let's take a couple of questions. Do I have a hamster? I do not have a hamster co, but I do have 8 dogs. One of them you probably just heard clicking with his nails. He is my King Charles Cavalier. He is 12 and a half years old. He's doing well, but he's deaf as a post at this point. He is the father of our 6 puppies, 6 Cavapoms. They're not puppies anymore. They're 3.5 years old. And we have a Pomeranian mother. So she is a feisty little OT Cavalier, OT Pomeranian. She's Wolf Sable. So she's quite light with an eyeliner, as I like to call it. And then we have 6 Cavapoms by the 2 of them. So right now I have 4 of them in the room. Most of them are asleep though. So yeah. When are you moving into a new home? Friday. This Friday. So yeah. This Friday is the big moving day. And yeah, it's going to be crazy. After my appearance on Thursday for, is it lunchbox trading? Let me look at my calendar. Yeah, so after my lunchbox trading, I'm doing the dismantling of my computer and my screens. And yeah, Friday morning we have a removals company coming in. They're going to take most things. So I think I'm going to take my computer with me because I don't want something happening to it. Like monitors can be replaced fairly easily because they're not like super expensive monitors. For some reason, I'm waiting for, the old OLED monitors to come out flat. I absolutely despise curved monitors. I don't know what it is, but they're so like, I find them really claustrophobic. It's really bizarre. I don't want anything kind of like, coming to surround me. I feel surrounded by the markets enough. But yeah, it's been like we put our main residence on the market in September last year. We got the offer for the place end of January. And since end of January, because we're buying a place that is kind of a countryside place, but it's really modern. It's like a single-story modern building. I'm joking because it's cladded with like wood and stuff. I say that I'm going to live in a very large shed. It's always been my dream. But we have a big garden in the new place. We have farms either side. I had to get Starlink, so that's getting delivered Thursday at the neighbor's house, because the neighbors that we have, they are actually selling that place because they built another place for their children to live in. But then their father passed away or something, and they decided to sell both. They're still in the other house, so they're 30 meters away from us. And they're still there. So we had a lot of issues with like trying to sort out things. It was like a weird thing, but there was a restrictive covenant. And then it turned out that was from 1962. This is England for you, right? Some lady who was like a baroness of this and that decided that she liked the trees in our part of the plot, and she had this covenant to not pull out the trees, but then they pulled out the trees when they were building this house. So now it's like, did they break the covenant? So they had to get more insurance and indemnity policies, and I'm like, Jesus Christ, it's like, we just finished this now. So I've been very stressed out, very anxious, very kind of, when am I moving? I want out of London. And London is like, a prison. It's like you can't, I just want out. So yeah, it's gonna be good. Sarah says, near me in the countryside. Oh, cool. Well, where are you, Sarah? If you're not too far, I'm moving to Cranley. I mean, it's outside of Cranley, but it's the closest thing. I don't find moving that much of a problem because, we already kind of partly moved when we were showing the house. So, yeah. Ah, yes, we're going into a neutral day. Let's see what happens here. I'm going to leave this to touch VWAP. I think it... oh man, this looks newsy. What's happening? Ah, great. Yeah, so we've just had EU news. Everyone wants to accelerate free trade agreements in the EU. US tariffs are unfair. The EU does not feel weak or under undue pressure to accept unfair deal with the US. That's what's causing copper to jump. Let's see what they do around this VWAP. And then I'm only in with 3 micros for this very reason. We're still in a very, very interesting environment. Yeah, no, they're not going to. Neutral day. Are we going to come back? But it's okay. It's only, it's only going to be what? $210. That's easy to come back from. This is where, if I'm thinking range bound day, let's take an opportunity to scale into this. And again, it might get smacked in the face here, but let's see. Let me just have a look at bookmap for a second. Because I do need bookmap for this purpose. All right, let's try it. Here we go. So this was a scale-in point because we now have a neutral day. And that's my hypo 3. Even though I'm in a trade already looking for a better swing, but I've basically still sticking to the max default. I actually have max default size of 1 mini on this account at the moment, so I'm still well under it. And this is how I like to scale into accounts. You have to have a setup that matches it. Obviously, this still might not work because of the news, but there's a decent chance that they just come back down. So now I have a slightly better average and a tiny stop loss. 56 ticks is my usual stop loss. Now it's 37. If that doesn't work out, that's absolutely fine. But if it does work out, now I have a nice position size to run this further. So I'm not going to touch this. Stop loss stays where it is. We don't touch stop loss, okay? If it gets hit, it gets hit. It's fine. But if this comes back, then we have a very nice starting point. I never advise people to average into losers. This is just working a position in a zone. It's not the same thing because on the 1 hour chart, we have some supply here, and the way I'm seeing it, this was just a stop run through the previous London high. And now we have a neutral day type. Neutral day means at least coming back into the middle. So while it looks scary, it is actually one of the setups that I quite enjoy because everybody else gets stopped out, but the stop is always a little bit higher than the stop runs. And then I sneakily either add or get into it if I don't have any trades. I would have initiated around 470, 80 anyways. And then if it does start bleeding through and pick up speed because of, stop run and reverse, as I like to call it, stop run and reverse, you have slightly bigger position, smaller stop, and therefore your risk profile of the trade, providing that you work within the max default of your position size and your max default stop, so don't mess with the stop loss. Stop loss stays the same. I'm not going over my 1 mini. I'm still well within that. But I've just increased the probability, just increased the position size. And now if this goes down, this is actually going to be a bigger trade than I imagined. But it is scary, right? If you don't know what you're looking for. Whenever the stop run happens, there's always a chance of a mean reversion down to at least the middle of this range. But yeah, there was a little ECB tape bomb there. So we'll see what they do with it. Whether this is sustained or not. But at the moment, it's bleeding below VWAP again. And if this closes below VWAP, I can basically deem that this is not a bad way to scale in. So there you go. Let's go down to a 30-minute chart. Anyways, we've come to the end. I am going to stay in on this. This is my one of my funded accounts, obviously. So let's just see what happens. And I'm not going to take it. So at least until, I'm going to keep this going at least until COMEX starts. So another 2.5 hours. But yeah, let's see what they want to do with this. Anyways, enjoy the rest of the broadcast. I'm going to be here with Jerome, hopefully tomorrow for another Neuro Wednesday. Are there any more questions? Did I miss anything? I don't think so. Yeah, Paul H. says, great, best move I made was getting out of London. I looked at Starlink. My company puts in leased lines, so I get mine cheap. Yeah, that's fine. I mean, I don't mind paying for it. We've got the business one, because I don't like the fact that they limit on the residential. And I'm like, no, F that, right? All right, so, yeah, this is not why you don't go into breakout trades on a neutral day. So this is something to take away for the stream. Anyways, yes, this has been the Euro Trade. Join me tomorrow for the Euro Wednesdays with Jerome. I will see you later, actually, for Lunchbox Trading, because I am on today as well. Just looking at my calendar. And if you're in with me with my 150 VIP session for the risk management, that was a raffle that we ran. So whoever won that, I know Sarah, you said you were one of them. Sharif says, Deeyana, why can't we trade HG and MHG and live funded accounts? You can, but you need to pay for COMEX, mate. It's a different exchange. You have COMEX, NYMEX, CME, CBOT. Okay? If you pay for all four, you better be making like 10 grand a month to be able to justify like $500-600 of data fees as a professional trader. But you can. You just need to go into the live data feed, and then you sign up for it, but do tell the risk team that you signed up, because they have to enable those products on your end. But yeah, I've traded HG, Platinum, everything. However, I always pay for COMEX and NYMEX. I don't really pay for equities on live, but I have been trading YM, so maybe if they move me to live again, then, you know, I might be doing a bit of CBOT as well, so we'll see. Anyways, that's it. I have trouble finishing streams today. Jesus. This has been the Eurotrade. I'm Marcus Stalker D. Thank you for joining me. I will see you later. Have a good day. Take care.